It's time to start tax planning, and I say this every year to my clients, but many of you wait until the last minute. And now I'm telling you, waiting will potentially cost your business thousands of dollars. Why? Because there are things that you should be doing right now to reduce your tax bill. And quite frankly, you should have started in January. But here are 5 of my top tax planning and preparation tips for every business owner to start doing right now. And I do mean right now. But before we jump in, I'm gonna need you to like, I'm gonna need you to comment, and I'm gonna need you to subscribe so you don't miss out on any wealth building information. Now, let's get after it. Tip number 1, in order for you to reduce your tax bill, you absolutely have to have a good forecast of where you are with your income and expenses. I know you guys hear me say all the time, you need to have good books and records. Well, in order to really figure out how to reduce your tax bill, we gotta have a benchmark of where we are starting. That is why taking the time right now to stop, get your books and records in order, know how much income you've made year to date, know what your expenses are year to date is really the springboard, the foundation to tax planning. And that's not a joke. Some of you may be thinking, oh, you can plan without that. But what exactly are we planning? My best analogy is this. If you need to drive to get someplace, right? Let's say you're at home and you want to drive to Disneyland, or you're at home wherever you live and you want to fly to another state. Well, you need to know where you are in order to navigate to where you're trying to get. That is why my first tip, you gotta get your books and records in order. That's tip number 1. Tip number 2, once you get your books and records in order, you gotta forecast your tax liability. You gotta do what I like to say is a mini tax return. For me, I'm always looking to see what is my client's tax liability going to look like. So for example, if I am looking at June 30th and my client has 6 more months of the year and my client's not in a seasonal type of business, then I could probably double that net profit and say to myself, if my client's at 50 at 6 months, they're probably gonna be at 100 at 12 months. So being able to forecast the tax liability tells me what I need to do to lower the tax liability. So I have to get a tax forecast. I wanna know what your liability is gonna be federal and state. I wanna know what are you anticipating the remainder of the year to look like. Tip number 3 is maximize your expenses. We are always looking for some magic sauce to reduce our tax bill. One of the things that I like to do with clients, before I go out and give them any other tax liability, the number 1 thing I am gonna make sure of that you're already maximizing the deductions that you have. And many of you are not. How do I know? Because this is literally what I do for a living. Many of you are not. Many of you are not taking what I call my top 5 deductions because you're afraid to take them. So I want to make sure you're maximizing the deductions that you have before we go shopping for new ingredients. So the best analogy I can use in this case is I want to prepare a meal. I am a crab girl. I like a good crab boil, right? I like shrimp. I like corn on the cob, sausage. But before I go out and start shopping for ingredients, I want to see what do I already have. Do I already have some crab in my freezer? Do I already have some shrimp in my freezer? Do I have the seasonings that I need? Many of you are sitting on top of great tax deductions and you don't even know about it. Why? Because you never even thought it was a tax deduction. So the very first thing is maximize your deductions. And with that, I want to make sure you know what I'm talking about. Are you taking the best car write-off that you can? Are you doing actual expenses or are you doing a standard mileage rate? Are you taking a home office deduction? Many business owners think, I don't qualify for a home office deduction. I don't go to work until I'm at the client's location. Well, there's this thing called an administrative office. And you can have 2 offices. You can have more than 1 office. So are you taking your home office deduction? Are you? Making sure that you have looked around yourself and is there anybody else that is taking money out of your pocket that you as a business owner could potentially put on payroll? Something else for you to look at. So when it comes to lowering your tax bill, you want to do it in the proper sequence. Proper sequence: number 1, get your books and records in order. Number 2, know what your tax liability is. Number 3, maximize your deductions, because you're not doing that. Have you gone through your personal checking account, looked at what you're paying for, and realized, you know what? I'm using this for business. It's not even personal anymore. Have you done that? That is why I say number 3, you have to maximize your expenses. The 4th thing you need to do as a business owner, you need to revisit your entity structure. What entity are you operating your business in? Are you still operating as a sole proprietorship? Are you? You could be, and it might be appropriate for you to operate as a sole proprietorship. Or are you a single member LLC looking to go to a multi-member LLC? Or are you a multi-member LLC looking to go to an S corporation? So the next thing up for me is looking at your entity structures, because entities, the way you form your business, drives tax. Entities drive tax. IRS collects the tax, but the entity structure has a really big impact on the amount of tax that you pay. When we're dealing with entities, we want to do entity tax optimization, not minimization. So it's so important to understand that. So number 4, make sure you are optimizing the entity you're in so that you can minimize the taxes that you pay. My 5th strategy is making sure you have some type of retirement strategy in place. Do not put in my comments that having retirement or deferred money placed away in a 401k or somewhere else is not a good idea. I beg to differ. Why? Because some things are foundational. As a business owner, not only do you need to be saving for today, you need to be saving for tomorrow too. And your retirement at some point is going to become inevitable. It doesn't necessarily mean that you're going to not work in your business. It doesn't necessarily mean that you're not going to own your business, but making sure that you're setting some money to the side for retirement is important. When you do deferred money, when you put money into a 401k or into a self-employment IRA, for example, you are now saying to yourself, I'm going to take some money off the top of my income and defer it so I can minimize my tax. The key is making sure that you understand the long-term play. What is my life going to look like 5, 10 years down the road? And for my younger people that are listening to this, even if you don't know what the plan is going to be for the future, you can at least start to plan for the future. So setting some money aside today in a deferred account is going to be my recommendation for you, especially if you're in some high earning years and you're looking to reduce your tax bill. You want to do what I call foundational planning. And this is where it all began. Too many of you are saying, let me go invest in real estate. Let me go do X, Y, and Z. We got to get foundation down first and stop trying to leapfrog the process, because leapfrogging the process means you're building wealth on quicksand. Quicksand. You're building wealth on quicksand. You want to build wealth on a stable foundation. So it's going to be there generation after generation after generation. So here's the thing, my friends. I've always told you that when you know better, you absolutely have to do better. That is why you now know that it is going to be foundational for you to do my 5 tax planning strategies right now. Number 1, you're going to make sure that you have your books and records together so you know exactly where you are from a net income and profit perspective. Number 2, you need to know exactly where you are from a tax liability perspective, and you can't know that without knowing where you are from a profit perspective. Number 3, you're going to maximize your deduction. Stop looking for other things to write off until you make sure you maximize the deductions that you currently have. Number 4, you're going to look at your entity. Is your entity optimized for tax minimization? Are you in the right structure? And you're going to check that out. And number 5, you are going to start planning for retirement. And you know what else you're going to do? You're going to like, you're going to comment, and you're going to subscribe so that I can continue to keep you updated on all things tax and wealth building strategies.